Ladies and gentlemen, good day and welcome to the Star Cement Q2 and half year ended FY26 earnings conference call ended 30th September, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q2 FY26 earnings call for Star Cement Limited. On the call, we have with us Mr. Tushar Bhajanka, Deputy Managing Director, and Mr. Manoj Agarwal, CFO of Star Cement. At this point of time, I will hand over the floor to Mr. Tushar Bhajanka for his opening remarks, which will be followed by remarks from Manoj ji, and then we can have the Q&A. Thank you, and over to you, Tushar. Thank you.
Yeah. So, hi, good afternoon all. My name is Tushar Bhajanka, and I'm the Deputy MD of Star Cement. I welcome you all to the conference call of FY26 Quarter 2. I will like Manoj ji, the CFO, to give his remarks regarding the numbers, and then we can start with the Q&A.
Yeah. Hi friends, very good afternoon. I, on behalf of Star Cement Limited, welcome you all to our Concall for discussing our number of Q2 FY26 and half year ended September 25. I would like to clarify that we are discussing on the historical numbers and there is no invitation to invest. Having said that, now I will just take you through the Q2 number followed by half year numbers. Starting from clinker production during the quarter ended September 2025, we have produced 9.18 lakh ton of clinker as against 6.58 lakh ton same quarter last year. So far as cement production is concerned, we have produced 10.83 lakh ton this quarter as against 9.55 lakh ton same quarter last year. Now I will take you through the sales volume. During the quarter, we have sold 10.73 lakh ton of cement and 1.01 lakh ton of clinker as against 9.62 lakh ton of cement and 0.15 lakh ton of clinker in the same period last year. This is as far as cement and clinker sale is concerned. As far as geographical distribution of cement is concerned, in Northeast we have sold around 7.64 lakh ton as against 7.49 lakh ton during same quarter last year. And as far as outside Northeast is concerned, we have sold 3.09 lakh ton of cement this quarter as against 2.13 lakh ton same quarter last year. In terms of blend mix, it is almost 16% of OPC and the rest is PPC. These are the quantitative number of the quarter. Now I will take you through the financial. The total revenue figure for this quarter is around rupees 811 crore as against 642 crore same period last year. As far as EBITDA figure is concerned, this quarter we have done an EBITDA of around rupees 194 crore as against 97 crore last year. Profit after tax is 71 crore as against 6 crore in the same period last year. On per ton EBITDA front, it is rupees 1650 during this quarter as against 995 per ton same quarter last year. This is what our quarterly numbers of second quarter. The total revenue figure for the half year ended September 25 is around 1723 crore as against 1393 crore same period last year. As far as EBITDA figure is concerned, during half year ended September 25, we have done an EBITDA of around 424 crore as against 215 crore last year. Profit after tax is 169 crore as against 37 crore in the same period last year. On per ton EBITDA front, it is 1715 during the half year ended September 25 as against 1000 per ton same period last year. These are the quarterly and half yearly numbers. Now I request all of you that if you have any query, you can ask the same, and then I will request Vaibhav to moderate the queries wherever it requires. Thank you. Vaibhav.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then 1 to ask a question. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, the first question I had was on your expansions at Silchar and Jorhat. Like, could you kind of throw some light on what is the progress and the timelines for that same?
So, for Silchar project, we are planning to commission it in the next 3 months. So we should be able to commission it by January, in the next calendar year. And for Jorhat, we have acquired the land. We have applied for the permission. But we are looking at the demand, supply situation right now, and then trying to take a call about Jorhat. So it may, we may announce a deferment of Jorhat project by a year. Instead of Jorhat, we have also started acquiring land in Bihar. And there is a very lucrative scheme which has come in Bihar, which is offering 300% SGST benefit in Bihar for whoever sets up their plants in Bihar. So we are looking at east market of Bihar, specifically central and east market, and we have identified a plot in Begusarai, which we will pursue and try to put up a plant there, and we'll come up with the timelines in the next quarterly meeting.
And what will be the size of the Bihar plant?
Sorry?
What will be the capacity of the Bihar plant?
So the capacity that we're planning to put up is about 2 million. So what really happens is that rather than putting up more capacities in Northeast, immediately, we will be able to cater to a larger market of Bihar, and given the SGST benefit that we get along with it, it becomes decently viable.
Sure. But just a thought over there, like, isn't the Bihar market right now seeing intense competition, like with JK Cement entering the market, and generally pricing in the market has been in a tailspin? So while incentives might be there, but just understand that part.
Yeah, no, so of course, like Bihar market, because it is the fastest growing market in the East India, it is, people have anticipated that, and of course, put up capacities accordingly. So because of the size of the market, first of all, we are only putting 2 million, and we already sell, we already sell about 6-7 lakhs in Bihar market. So we will try to create a market using a Siliguri plant in Bihar, and then put up a grinding unit in Bihar so that our capacity utilization from the very first year is better. And also, we're talking about 2 years later. So, the scenario of the market right now may not be the same after 2-3 years. So, I think that is also a function.
Sure. And what is the incentive that you mentioned that you'll get in this?
Bihar has come up with a new industrial policy where you are eligible for 300% SGST benefit. So, whatever you sell in Bihar, you'll get the SGST benefit of it.
Okay. Sure. And just quickly also on the incentive that you booked in the quarter.
Yeah. So we had booked about 56 crores in the quarter as incentive.
Thank you. I'll come back in the queue then. Thanks.
Thank you. Participants, you may press star and then 1 to ask a question. Our next question comes from the line of Naveen Sahadeo from ICICI Securities. Please go ahead.
Yeah. Good evening to Sarji.
Good evening.
Hello.
Good evening. Hello. Yeah.
Good evening. So I just wanted to understand, in terms of your CapEx priorities now, what is, if you can just help us understand the priority. Is it the Jorhat grinding unit? Is it the Bihar grinding unit? If, our approvals or whatever land that you're looking at, that is a priority, or the north region that we are looking, that is that where we had, I think, bagged some limestone mines. that is a priority? If you could just help us understand that.
So I think, no, thank you for the question. So right now, after we commission Silchar, which is in the next 3 months, so hopefully by the time we are having our next call, Silchar plant should be commissioned. Our priority will be to, from a northeast perspective or east perspective, our priority will be to put up the Bihar grinding unit. And we've already we've already gotten the approval from the government. We've already acquired the land also in Jorhat. But we are deferring the project for a while because we are already getting a Silchar project up and running. And I think, that will give us enough capacity for Northeast. So we are looking at Bihar just from a better capacity utilization of clinker perspective and also, expanding our geographical reach perspective. Coming to Rajasthan, in north, we had acquired a mine in Jaisalmer, which was actually one of the largest mines in Jaisalmer at one of the lowest premium as well. Then we had also acquired, mines in Nimbol area, which is central Rajasthan, right? And we are, acquiring land also in Nimbol. We are trying to acquire the plant land also, the mines land also. And then we are looking at some other mines which are non-auction mines in Nimbol, so that our cost of, limestone will be lower once we start the plant. And we plan to put up about 4 million tons in Rajasthan and Haryana, right? So that is a natural expansion, that we are working on. Right now, we have not come up with a very decisive presentation, mainly because we are still acquiring land, we are still trying to figure out the difficulties of the terrain. But, in the next 5 years, if you ask me what the plan is, I think our plan involves putting up a plant in Bihar for sure, also a plant in Jorhat eventually. Our plan involves 4 million tons of clinker plus grinding in Rajasthan area. And then it of course involves, eventually to put up another clinker plant in northeast, which will be most likely in Umrangshu area, which is Assam. And for Umrangshu area, we have already acquired the land, we have already acquired the mines land, we have already acquired the permission for mining.
Understood. So just to confirm, in the scheme of things, your first priority now is a grinding unit in Bihar. Second will be Rajasthan. Third will be then Jorhat meanwhile, or Jorhat can possibly be the number 2 priority?
Yes. So I think our plan is, like what you said, Bihar. Along with Bihar, around the same timeline, we are also trying to work on Rajasthan so that we can, groundbreak and start our commissioning. At the same time, we are getting our permissions for the Umrangshu clinker plant. It may take 1.5 years to get those permissions, so we've already applied for it. So first we'll put up the Bihar and we'll, start working on the Rajasthan plant, and after that we'll put the Umrangshu plant along with the Jorhat plant.
Understood. So basically, for Jorhat now to happen, we need a potential clinker line from Umrangshu. As of now, existing clinker we'll use towards Bihar grinding unit and existing other units. Is that correct?
Yeah. And for that Umrangshu plant, we have already also acquired the land, the full land of the mine, land of the plant, and we've also won an auction mine which has about 180 million tons reserve at about 57% premium, which is not very high given the margins in Northeast. And we have already started with our work, with basically getting other permissions, the ECs and other permissions.
Understood. And so as far as your Rajasthan expansion is concerned, I believe Nimbol will be a priority over Jaisalmer, right?
Yeah.
Or it's the other way around?
So, we are also just, still deciding, but yes, on the face of it, Nimbol does seem to take priority over Jaisalmer, mainly because we wanted to enter, north from a geographical location which is a bit more central, right, so that we are able to cater to markets more effectively. And Jaisalmer, we had gotten that mine just from a future prospect that our second or the third line could be in the future in Jaisalmer, because Jaisalmer in the next 3-4 years, like you may already know from other commentaries of other cement companies, is going to be a big hub. And it's the future deposit for serving the entire north. So we just thought that, if we can, we should lock a mining Jaisalmer as well.
Understood. My second question then was about your incentives, because in the GST rate cut regime, of course, can be a decline in the annual accrual of the GST. So if you can just first of all understand what was the GST booked in Q2 of FY26, and then if you could just take us through how should one look at this accrual now from a quarterly run rate or from an annual perspective, and also just a clarification if the total incentive pool also gets shrinked because of this GST rate cut, or we can get an extension period over there. So it's only the time lag and not the total incentive pool which gets compromised. Clarity will really help.
Yeah, so no, I'm happy to provide the clarity on that. So basically, of course, the GST percentage came down, right? So because the GST percentage came down, the SGST percentage was also come down. And so hence the reimbursement of that benefit has also come down, right? So the impact that we feel that we'll have on the overall volume will be of about 130 to 150 rupees per ton. So that is the impact that we feel that we'll have. So so that is the impact. Of course, the quantum of the benefit, which is fixed basis the capex that we do, remains the same. And I think the pace at which we consume the benefit anyway is 5 years, and we have gotten time for 15 years. So, the benefit that we would have otherwise accrued in 5 years may get postponed to 6th or the 7th year. So, we don't have to get any extension on the timeline of the benefit, because anyway we have 15 years, which is more than enough for us.
Understood. So roughly 130 to 150 million ton impact is all that will come to us. That's what time lag impact and not the total pool.
Yeah, so it's more of a time value impact, yeah.
Helpful. Thank you so much. I'll come back in queue if I have more questions.
Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Sir, just to again clarifying on the what right now we have discussed. So first on the capex front. So now in 1H we have done 211-12 odd crore. So for full year of FY26, 27, and maybe possible for FY28, what kind of a capex we can look at, and there also if you can specify if we go for a Nimbol 3 million clinker and 4 million grinding. So previously I think we have said 2,400, 2,500 crore. So will it remain the same?
Sorry, can you repeat the last part?
I said that for Nimbol, if we go for a 3 million ton clinker, 4 million ton grinding, last time I think we were looking at 2,400 to 2,500 crore capex total. Will it remain the same?
Yeah, so I think that broadly remains the same, about 2,400, 500 crores for Nimbol. But again, I have to get back to you with the exact projections and everything else. Right, and once we are completely decided at the promoter level, we'll also share a presentation of what we're thinking, so that the investors clearly, clearly transparent to the investor how the expansion is going to take place. But answering a first question regarding the capex that we plan to entail in FY26, the meaning of FY26, we plan to entail. We plan to entail about about 500 crores of CapEx in FY26. In the remaining of FY26, mostly will be going in completing the Silchar project. And then we're also putting up a solar power plant, which is of about 2 megawatt in Assam. We've already acquired the land for that as well. So I think so that 500 is broadly split between Silchar and the solar plant in Assam.
Sir, just to again clarify, so in 1H 26 we have done 211-12 odd crore, another 500 crore in second half. So total put together 720 odd crore that we are looking at for full year of FY26.
Yeah, exactly. And this includes, the major items in this is the Silchar plant, right? And it also includes the solar plant, and it also includes the land that we have bought in Umrangshu, in Bihar, and in Jorhat.
Okay. And for next year, FY27 and maybe for FY28, given, let's say, if we go by what we are saying of Bihar 2 million ton and then the 4 million ton Rajasthan and maybe Jorhat also. So in that sense, how much one can look at capex?
So for that, I have to get back, because for that I have to first solidify my expansion plan, and then only will it be fair for me to give numbers and throw numbers out. So I think, what we'll do is that in a month, I think we should be able to gather our information and make a presentation. In a month and a half, we'll post the presentation, right? So that which will have all these details, which will have a lot of other details as well, so that your question is answered. But right now, I don't think it will be fair for me to do something like this.
Okay, but still a broader level, 2 million ton grinding in Bihar would be broadly, the capex would be how much? 300 crore?
No, I think capex for 2 million tons is more than that. I think it should be about 500 crores for sure, including the price of land.
Okay, got it. And in terms of timeline, if we start, let's say, whenever in next 3-5 months, it should be commissioned by first half of FY28, 2 years down the line.
Yeah, that is what the target is.
Okay. So now coming to on the volume front, so last time we said we are looking at 5.4 to 5.5 million ton for this year. So we have already done a decent 16% kind of a growth. So in that number for full year remains, or is there a possibility of some upgrade in volume?
No, I think the number broadly remains the same. October was a good month, so that gives us some confidence that going forward, probably the next 2 quarters will be good. But again, I think on a conservative basis, I think we'll be able to meet the targets. We're also given an EBITDA estimate as well of about 1,600 rupees per ton to 1,650 rupees per ton. But given how it is going, I think the EBITDA are a bit more healthier than what we had estimated.
Okay. And in terms of now full year, though you said the 130-150 per ton incentive impact will be there because of GST, but on a absolute basis, if we have to look at for full year of this FY26, I think last time we were looking at 230-250 odd crore. In 1H we have already done close to a kind of 118-120 odd crore. So how much one can look at on absolute basis?
Are you talking about EBITDA?
No, incentives, sir.
I think we may be looking at about 180-190 crore. I don't have exactly what our expectation is for the year, 180-190 crore, yeah.
Got it. Lastly, sir, a couple of data points: trade share, premium share, lead distance, Kcal cost, and if possible, the fuel mix.
Okay, so trade share is 20% is.
Sorry, sir.
Trade sales,
I didn't get.
Yeah, trade sales is 80%.
Okay, got it.
Yeah, non-trade sales is 20% course. Premium sales is about 13.1%.
Okay. Lead distance?
Lead distance is about 230 kilometers.
Okay. And kcal?
And fuel cost is 1.25 rupees per kg.
Oh, so there is a decent decline from 1.35 to 1.25 QOQ. So this number will remain in third quarter, similar?
Yeah, I think in third quarter it should be broadly similar. I don't think there's a reason for it.
Okay. And in terms of fuel mix, spot contract, FSA and Nagaland coal?
Yeah, mainly it was, FSA only. I think 80% got from FSA, and then rest was broadly, biomass and, another sources of coal, yeah.
Okay. Good. Sir, thank you and all the best.
Yeah, thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Parth Bhavsar from Investec. Please go ahead.
Yeah, hi, sir. So thank you for the opportunity. Sir, I had questions on competition in the Northeast region. So I wanted to so basically, Ambuja has won a limestone mine in the region. So I wanted to understand how do you see the competition coming up over the next 2 years, and have they acquired any land to build a plant, and are they eligible for an incentive scheme in the region?
So, what I know is that of course they have one mine in auction, I think about 5-6 months back, and and the land is owned by the district council. So I don't know if they have been allocated the land or not. But I think, and I'm sure they may have their plans of putting up a plant. But it normally takes about 2 to 3 years at least, to put up a plant because it's a greenfield and also in a very difficult terrain. So, so that is my expectation of the competition. And I think, Northeast generally, it has been, us as the largest players, and it has been Dalmia, and then, we have 3-4 smaller players in Northeast which are not listed, which are not there. So I think once that entry happens, there will be a bit of a competition, I guess, but at the same time, there may be some consolidation for smaller players. And right. Then, I think it will just go how cycle goes, I guess.
Okay. So, sir, how do you once Ambuja plant comes in? So, how do you see the profitability for the Northeast region to fare like? And then what would be your stance like? Would you go after the market share, or would you save up you will try to manage improve your profitability?
No, so I
would
think
be volume over value.
Yeah, so I think the strategy basically, so right now about 18% of cement is coming from outside Northeast, right? That's a big number. That is mainly coming because profitability and margin in Northeast is quite good. So I think, so it has to be a combination of both. One has to hold the market share, at the same time hold the prices, and to, of course, reduce the amount of cement which is coming from outside, and probably from the smaller players, right? So I think that is an adjustment phase. I don't know how exactly will it go, but, we think that the market still has a decent level of concentration, right, which will definitely help us and in the longer run maintain the margin.
Okay. So you think you can protect this profitability even going ahead with the competition coming in?
See, I think I can't predict, after 2-3 years when the competition does come, what the intensity would be and what is the impact on price and so on and so forth. But I do understand that, anyone who's getting into business, right, is in the long run there to earn, right? So that is true for an extent also, and that's true for an incumbent also.
Thank you so much for answering my question. Thank you.
Thank you. Participants, you may press star and then one to ask a question. Our next question comes from the line of Uttam Kumar Srimal from Axis Securities. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on good set of numbers. Sir, can you highlight current pricing both in Northeast and Eastern India after quarter two exit prices? How is the current pricing feeling in both Northeast and East India?
Sorry. Yeah, so Northeast the price is about 493 rupees.
Okay, so it has gone down or it is at the similar level of quarter two FY26 exit prices?
No, so are you talking about prices right now and quarter two?
Yeah, compared to quarter two, is it gone down? How much, or it is on the same level?
No, so between quarter one and quarter two, the prices have gone up by about 8 rupees.
And currently compared to quarter two prices.
Yeah, so right now the prices are broadly similar to quarter two prices.
Okay.
And and in Bihar, the prices in quarter two had fallen by about 5 rupees compared to quarter one. And I think the price in Bihar right now is the same as quarter two prices. West Bengal had also fallen by 7 rupees in quarter two compared to quarter one. But the prices right now in West Bengal also should be similar to quarter two.
Okay. And sir, what is the current status of our AAC block? Because I think that has already been made operational. So what kind of revenue we have derived in quarter two, and how this is going to be for the full year?
Yeah, so from AAC, we have just started it 3-4 months back, and we've been ramping up the capacity. Last month only we were able to produce it at 18,900 CBM. And the capacity of the plant is about 16,000. So we've already ramped it up in the off season to about 60% capacity utilization. The revenue that we've gotten from it is quite minimal. It's about 13-14 crores. But I think going ahead, because we only had a full production last month, but going ahead we do expect a revenue of about 50-60 crores to come from it.
And sir, what would be the margin in this particular business?
Sorry?
Margin for AAC block, what would be the margin in this particular business?
So margin would be quite, I think it would be, normally it should be about 12 to 15%. That should be the margin, right? Because it is a low asset turnover, decent EBITDA margin kind of a business normally. But it also depends on the competition. The reason why we got into AAC is mainly because one of the largest raw materials is fly ash and the other one is cement. And the second reason was because the distribution is very similar to cement in non-trade. Right? So it acts as an extra product for our non-trade customers as well as dealers. We have also launched the construction chemical segment, which is, just in this month only that we launched it. You'll see the revenue numbers for that also in the next meeting. And we have also gotten into RMC. So, we're trying to get into forward, trying to just forward integrate ourselves, because that's where we see the market could be moving, right? So that's what we are thinking of.
Okay, sir. Last one. Recently, we have company has passed resolution to raise some fund. So if you can highlight on the same.
Sorry.
The company has passed some enabling resolution to raise fund around 1,500 crores rupees. So if you can highlight on the same.
Yeah. So as I mentioned to you as well, as mentioned in that circular, we had taken a resolution to raise about 1,500 crores. Right. We do not know if it will be in what form, right? Issue of preferential allotment or QIP or some other form. That is mainly to kind of fund the expansion that we may have in Rajasthan, which we will circulate the details of. When we do circulate the details of the entire expansion project, we will also circulate how we are raising the funds to fund that project. And I think that is why we have made the resolution as well.
Okay, that's all from my side, and wish you all the best.
Thank you. Thank you.
Thank you. Participants, you may press star and then one to ask a question. Our next question comes from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah, thank you for the follow-up opportunity. Sir, if you could comment on the demand scenario in Northeast, is the government-led CapEx or infrastructure focus which was there, does that continue? Or you see there is some, slowdown or some sort of, shortage of funds that is being put, which could hamper demand? How do you see the current demand scenario and your maybe the outlook as well? How are you seeing it going there? Thanks.
So honestly, I think that the current demand scenario is, compared to other areas in North India, they're quite robust. So I think the market is growing at about 8-9%, which is a bit higher than the market outside. And that's one. The second is that the infrastructure investment, is yet to come in a significant way. I think there's a lot of, initial inquiry about the dam projects, the hydro projects which are coming up in Arunachal. And I think once these projects are in full swing, we'll see a big demand coming up from there, which has still not started, right? So, but there are expectations, as we read news and otherwise, there are expectations of these projects starting soon. So once these projects start, I think it will become a great source of absorbing
Naveen sir, does that answer your question?
Yeah, it does. Thank you so much.
Thank you. Our next question comes from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good afternoon. Am I audible?
Yes, sir, you're audible. Please go ahead.
Okay. My question pertains to this announcement of Bihar grinding unit. Just wanted to understand.
Sorry to interrupt. Rajesh, sir, just give me one moment. The line for the management has been disconnected.
Sure.
Give us a moment while we reconnect the line for the management back. Ladies and gentlemen, we have the line for the management reconnected. Rajesh, sir, you can proceed with your question.
Yeah. Hi, sir. My question pertains to announcement of Bihar expansion. So I understand you currently have post the recent clinker expansion, 6 million ton of clinker, and post the Jorhat you would be already having operating at 9.7 million ton of cement capacity, all being fed from the northeast. So and then you have the Silchar is already coming up, and then Jorhat is planned next year, which will take you to 12 million ton. So what is the plan? Because this Bihar will add another 2 million ton, which is almost 14 million ton of cement capacity. So is there any concurrent clinker expansion plans which is there in pipeline, or you would be operating at surplus grinding capacity?
No, so actually, we plan to put up the 2 million ton cement which comes in Silchar will make a capacity of 9.7. And then we plan to put up the Bihar plant, to basically make sure that the utilization of the clinker plant that we just put last year is a bit faster, right? And also because of the other benefit that we are getting in Bihar. And our plan to put up a plant in Umrangso is intact. So, so we have also gotten the mines in Umrangso, right? And we have already started our work on ground to get all the approvals. We have the land, we have the mine. We are looking to, get the ECs and all. And then we'll slowly start making our base, doing the, getting the roads, the power and all those things. So that whenever we do need clinker, in 1 or 2 years time, we are able to put up a plant and get the clinker supplying to the northeast and the east region from there.
Okay. So, this Jorhat, sorry, please go ahead.
No, Jorhat will be coming along with the clinker plant in Umrangso, broadly.
Okay. Right. Okay. So Umrangso clinker, by when do you look at that, coming up? And what quantum you're looking at?
That again, I think, but we haven't put a date to it right now, but I think 28, 29 is what we are anticipating, but really depends on the demand. So what we're doing now is
Understood.
just we're preparing every single thing. We're getting all the ECs way in advance. We are acting as if we are putting a plant now, right? And
Okay.
getting all
Okay.
the approvals. And then just before the construction stage, we are waiting and seeing how the demand is turning out. Right. So if the demand is coming across very well and, the Bihar market is also, consuming a lot of clinker for us, then we will go for a quicker expansion in Umrangso. Otherwise, we may wait for a year or two.
Okay.
Right. So
And
that's the
only
plan.
then you will concurrently put up the Jorat grinding. Is this
Yeah.
understanding correct?
Yeah, exactly. Because, because our whole point of putting up Umrangso early would mean that the demand in north and northeast and east is good, right? So we'll also have to put up a grinding unit there. So in 4 years' time, in the northeast east story, what you said is right, that in 4 years' time we should have the Bihar plant, probably Umrangso and Jorat. So we'll be 14 million tons with 9 million tons of clinker capacity, and then whatever we do in Rajasthan is extra.
Understood. Understood. And Rajasthan would also take at least 3 years whenever you start work on that project?
I think once we start work, once we have acquired our basic plant land and all, and we're already on the process, I think it should take 2 years. Because mainland, I think putting up a plant is relatively, the construction and all is a bit easier, and there's also less rainfall things. So, those problems aren't there. So my expectation will be that it would be less than 2 years or 2 years.
Understood. So somewhere in FY29, you will have both the Rajasthan as well as the Umrangso and Jorat all coinciding in around FY29?
Yeah, like probably one may come before the other, but yeah, broadly by 20.
Broadly.
Yeah, we expect that, we should be around that capacity. That's still the plan, that plan has to be discussed thoroughly.
Right.
Internally, and then only can I make a bold statement about it. So this is what we're thinking, yeah.
Broadly. Understood. So next year your major capex will go only towards the Bihar grinding unit.
Yeah, majorly towards Bihar grinding unit. I think some capex will start going in the civil work and groundwork in Rajasthan as well. If we go ahead with the Rajasthan project, yeah.
Understood. And this, I think that's on the. And what is the status with Dalmia's clinker plant ramping up? What sort of pressure is expected? October you mentioned has been quite healthy in terms of demand. So do you look at any pressure on volumes or pricing given with the Dalmia's major capacity now ramping up?
No, I don't think so. I think, I don't think there is a pressure on pricing or anything like that. I think, because the capacities that we both have set, we have to kind of be cognizant of the fact that, the market is still the size that it was last year broadly, right? So I don't think there is any point in the pressure in pricing, right? So I think that is something that we'll have to just, I hope that we are all able to understand that and things work out accordingly. I don't see the pressure right now, but I can't predict the future, really.
No issues. And lastly, on this fuel cost, which you mentioned 1.25 is arguably the lowest in the industry. So how sustainable is this? Because I know this is a costing players are paying for AFR, and you're on a blended basis operating at that cost. So is that sustainable over next few quarters, or do you see there were some one-offs in terms of high purchases of local coal which helped you that? What is the outlook for next 2 quarters on this fuel cost rate?
So, I think, the book stock that we have right now, because what happened was that there were a lot of rakes of last year of FSA which we did not get, right? Which was, it was carrying forward.
Okay.
This year, we got all those old rakes along with the new ones, along with the ones that we were supposed to get this year from FSA. In quarter 2. So our stock and book stock of coal is about 2,83,000 right now.
Okay.
right? There's a stock of almost about 5 to 6 months, right?
Mm-hmm.
5 months, right? And the cost of that stock is, I think, at 1.25 to 1.3 rupees GCV, right? So that gives me
Okay.
clarity that for the next 5 months, I don't think that the cost is going to increase of coal. It may hover between 1.25 to 1.3, between that.
Great. That's good to hear, sir. Thank you and all the best.
Yeah, thank you. Thank you.
Thank you. Our next question comes from the line of Harsh Mittal from MK Global. Please go ahead.
Thank you. Good evening, Tushar. So I have one small question. Given that state elections are scheduled in March next year, is there any possibility of demand being slow in quarter 4, or it is business as usual? Thank you. This is my only question.
No, I think the demand right now, like in October, I think we had a very good growth in Northeast itself, right?
Okay.
So I don't know, right now I don't get a sign, but it may be the case, but I don't have anything to validate it.
Okay. So, thank you.
Thank you. A final reminder to all the participants, please press star and 1 to ask a question. Our next question comes from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi, sir. Thank you. Sir, so net 20 million ton capacity by FY30, that a broader target remains intact.
Sorry?
20 million ton capacity that we want to reach by FY30, that remains intact.
So, I think the target that we have by FY29, FY30, given that we go ahead with the plans that we do, is of about 18 to 20 million tons. Like 20 million tons will be a business stretch, but 18 million tons I can see that the plan that we're trying to make may get us there. So at least 18 million tons is what I would say, and then if something else also comes up, then probably 20.
Got it. And sir, just on AAC block, construction chemical, RMC, so all put together in FY26 and 27, how one can look at in terms of revenue?
Yeah, I think overall next year, complete year with full production, I think we should be targeting about 80-90 crores of revenue from it. The reason why we did it is not a lot relating to the revenue or anything. I think these were just futuristic products that we had to get into as a cement company, right, from a branding perspective, marketing perspective, and also from a distribution perspective. And that's why we got into it. So my expectation would be 80 to 90 crores next year.
Okay. And sir, currently in terms of, let's say, Q2, the profitability in East versus Northeast for us would be how much broader? The East would be 400, 500 odd rupees?
That number I don't have it by geography right now, but I can probably you can reach out to Manojji and we can try to give you the information, but I don't have it right now. Sorry.
No. Why I was trying to ask is because now we are preferring a Bihar, so just trying to understand that structurally going forward, and once even Rajasthan also comes up, so obviously this will have a much lower profitability versus Northeast. So in that sense, I was trying to understand how we are looking at the profitability and at the same time the volume growth. And even for volume growth, sir, for next year, how one can look at, because now except this 2 million ton, I think everything will be in terms of practically from the volume perspective would be FY29 they will be contributing. So in that sense, wanted to understand how one can look at the volume growth for us for next year also, FY27.
So I think the volume growth that we expect for next year, because we're still ramping the we're still ramping the Siliguri plant, right? Because in the middle, we do not have clinker for 2-3 years, so we will first slow down our Siliguri plant. So next year also, I think we expect a 12% growth in volume, right? And as what you said, we're not entering the geography or anything as that, or any other thing. So 12% is also a decent growth. That's it.
Okay. ठीक है. Thank you, sir. All the best.
Thank you, Ji.
Thank you. Our next follow-up question comes from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah. Thank you for the opportunity, sir. Sir, I was just looking at the distance from Lumshnong to the Begusarai branding location, or Begusarai basically in Bihar. It's a good over 1,050 kilometers. So just wanted to get a sense that how are you planning to move clinker? Will it be by road or till Siliguri by road and thereafter by rail? Do we have any subsidies for freight in that sense? Or the 300% of the SGST benefit is what we are banking on to be ensuring that this unit dynamics stays IRR is profitable and in the comfortable zone. Some thoughts around how are we planning to move clinker will be very helpful. Thank you.
Yeah, so I think we plan to move around the clinker through Silchar. So we'll take the clinker to Silchar, then through rake we will take it to Begusarai. In Begusarai, we are looking for a location which is close to a railway siding, so that we can have the railway siding come in our plant. So the entire distance, from Lumshnong Silchar is only 70 kilometers, and rest of the entire distance is going to be covered through rail. And the benefit of Bihar state policy, will probably give us 400-500 rupees per ton benefit in terms of the margin. So I think which we plan to use.
Understood, sir. Very helpful. Thank you so much.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. As there are no further questions from the participants, I now hand the conference over to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you, Sagar. Sir, Tusharji, just one question, and Manoj says one question. So you have any one-offs in the Q2 numbers? And if you have highlighted...
Down expenses, because shutdown has been taken this quarter, so the 13 to 14 crore is there in the PL.
No, was it a one-off or it's a non-recurring maintenance, or like it's a...
It's a non-recurring, because shutdown generally we take in
the shutdown is normally annual in nature. So we have taken the shutdown in quarter 2 this year. And last year also we took in quarter 2 only. But a big difference between quarter 3 and quarter 2 will be that 14 crores, 15 crores of the...
So to that extent, this is not a one-off, right? This is a recurring...
Yeah, this is the annual thing. But, of course, it does affect the per ton EBITDA of... So like this quarter's per ton EBITDA is down by 100 rupees because there's a shutdown cost involved in quarter 2. Which will not be in quarter 3. Yeah.
Understood. Thank you, Manoj. Thank you, Tushar. Thank you on behalf of Philip Capital. We'd like to thank the management of Star Cement for the call, and many thanks for joining the call. Thank you very much. Sagar will now conclude the call. Thank you.
Thank you. On behalf of Philip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.